Okay. Well, I want to welcome everybody. I'm Tom Peterson, the Commissioner of Agriculture, and I want to thank everybody for joining us today. And I also want to thank Minnesota Farm Bureau and Minnesota Farmers Union for hosting this information session. And glad that we have President Glessing and President Werdish joining us today too as well. I also want to thank DEED's paid leave program and the staff for their work in implementing this program that was designed by the legislature. Minnesota paid leave will provide payments and job protections to Minnesotans when they need time off for some of life's most important moments. I always think about welcoming a child, recovering from illness, or caring for a loved one. As an employer, you play an important role in helping your employees learn and access the Minnesota paid leave program. So thanks for joining us today. I'm going to turn it over first to President Dan Glessing of the Minnesota Farm Bureau. Dan?
Yeah, thanks, Commissioner Peterson. Just want to welcome everybody to this webinar and proud to host it with Minnesota Farmers Union. For those who don't know me, I'm Dan Glessing, Service President of Minnesota Farm Bureau. I guess the thought behind this was basically to equip our members and those in the ag community with the knowledge and information. There's a lot of questions surrounding this, and I don't have to tell you all that agriculture and farms are, there's a lot of one-offs in there, and so just wanted to try and get you as many or as much facts and data as we can, and so proud to host this along with Farmers Union and Minnesota Farm Bureau. Thanks.
Hello everyone, my name is Corinne and I'll be facilitating today's webinar. I want to start by also thanking the Minnesota Farmers Union and the Minnesota Farm Bureau Federation for hosting and helping bring together your members and agricultural employers across the state for this conversation. It is so great to see so many of you joining. We have about 144 folks and counting online with us right now. So during today's presentation, we'll provide a quick overview of the paid leave law and then talk about steps employers should take right now to prepare for January 1st. We'll reserve the remaining time to answer your questions. We have a lot of information on the website as well, payleave.mn.gov, including frequently asked questions and an employer toolkit. We also have a ton of information on the website, payleave.mn.gov, including frequently asked questions and an employer toolkit. I'll also note that the slides for today's webinar are on the website as well and in the chat for your reference during the presentation. Today's webinar will be recorded for training purposes. Should we decide at a later date to make the recording public, we'll post a link on the website as well. Additionally, we sent out a regular email update about paid leave. You can subscribe to the newsletter on the website as well. We'll start with a 40-minute presentation from Betsy, followed by a Q&A session. For the Q&A session, we'll be joined by Erin Tell from the Unemployment Insurance Division at DEED to help answer any questions you have about registering your account. You can submit questions using the chat button to Erin and to Betsy. You can find the chat button at the top of the screen. It's the purple speech bubble with a question mark on it. There are two tabs in the chat, the My Featured tab and the Questions tab. Check the Featured tab to see announcements from our team and the links we mentioned throughout the presentation. Use the Questions tab to ask a question anytime during the presentation. Only you and the webinar team can see your question. Likewise, other attendees will only see their questions. Our team behind the scenes will be reviewing and moderating the questions for the Q&A session. With such a large audience, we may not get to all of the questions, but please ask anyways. We keep track of all of the questions and we'll use them to inform our outreach and update the FAQs on our website. If we don't get to your question, the Paid Leave Contact Center is ready to help you at any time. You can reach out to them using the form on the website, payleave.mn.gov, or by calling 651-556-7777, Monday through Friday, 8 to 4 p.m. Okay, that's enough from me. It's time for the presentation. Turning it over to you, Betsy.
Thank you, Corinne. And hi, everybody. My name is Betsy Orn. I'm the Strategic Program Analysis Manager for the Paid Leave team. I work on policy and evaluation for the program. And I'm really excited to be here with you today to talk about what you as an employer can do to be ready for January 1st when the Paid Leave program goes live. So we're going to jump right in. The first thing we're going to talk about is the basics of the program. So the things that you will want to know are, when would my employees need paid leave? Who is covered? And what are the benefits and job protections under the law? So just to remind folks, the Minnesota paid leave law was passed in 2023, and it begins in January 1st of 2026, which is hard to believe. It's just over a month away. The law provides both job protections and benefit payments paid from the state to individuals who need time off to care for themselves or their loved ones. And this program is similar to health insurance or other insurance programs where it will be funded by premiums paid by employees and employers. So those contributions will fund the overall program, and then when someone needs leave, paid leave will send benefit payments directly to Minnesotans while they're on leave. So this program is different than a program like Earned Sick and Safe Time that's funded by employers fully. This is, again, when someone needs leave, they'll be paid from the state for their leave. So this is really the program on a slide. There are two types of leave under the program. There's medical leave and family leave. Medical leave is exactly what it sounds like. It's leave to care for one's own serious healthcare condition. And these are incidents that last at least 7 days or more. So again, they're more serious health issues, not things that are just require a day-to-day absence. They're when somebody has to be away from work for 7 days or more. In the situation where somebody needs medical leave, these leaves need to be certified by a medical provider. The other type of leave is family leave, and family leave is a little bit broader. There are 4 types. There's bonding leave, which is leave to welcome a new child into your home through birth, adoption, or foster care within the first year of life or the first year after placement. There's military leave, which is leave because a family member has been called to duty or is on active duty. There's caring leave, which is leave to care for a family member who has a serious healthcare condition. And there's safety leave, which is leave because of sexual assault, domestic abuse, or stalking of an individual or their family member in order to do certain things like relocate, seek medical help, or attend counseling. So across each type of leave, an individual could be eligible for up to 12 weeks of medical leave in a benefit year for medical leave, or up to 12 weeks of family leave in a benefit year. And a benefit year starts from the day of first absence for the next year. In the scenarios where someone could be eligible for both, there are some scenarios where that could be possible, where someone could be eligible for medical leave and family leave. The maximum they're eligible for is up to 20 weeks. I will say in most cases, we know the average length of a benefit claim will be less, more like 8 weeks. And across all of these leave types, applicants will need to submit certification to show that their leave has been certified either by a medical provider or, in some of the other cases, another qualified professional. So that talks about coverage, who's covered. Now let's think a little bit about covered workers, what workers are covered. So the paid leave law covers most employers across the state of Minnesota and most employees, regardless of business size, type, if people are part-time workers or full-time workers. The coverage is very broad. And again, I think my understanding is that that's because the legislature really wanted to make sure that people across the state had access to this benefit when they need it. But this slide is really talking about groups we get a lot of questions on. So in the green box, those are all groups that are covered. Some of these we get a lot of questions on because there may be an exemption under unemployment insurance, but they are covered by paid leave. So that includes agricultural workers, as we're talking about here today. It also includes most seasonal workers. It also includes religious organizations, student workers, and owner officers of S-Corps. Again, none of these have an exclusion from the paid leave law. The only groups that explicitly are not covered and can't opt in, those are in purple. Those are in red, sorry. Those are federal government employees and railroad employees and certain seasonal hospitality employees. In purple are folks who are not covered but can opt in, and that includes independent contractors and self-employed individuals. So those folks are not covered under the law, but there will be a process if you are self-employed and you'd like to opt in, and there's more information on our website about that now. All right, so that talks about who's covered. The last piece around coverage to think about is that our law is a Minnesota law, so it covers Minnesota employees. And the law defines Minnesota employees using a localization test. Now, this is probably one of the more complicated parts of our presentation today. So we have some questions. Stay on your toes for these. All right, so we're going to start with just what the law defines. The law defines a Minnesota employee as anyone who works from a location in Minnesota 50% or more of the prior calendar year, So, for example, if you work from a location, a farm or an office that is in Minnesota, and you work from that location 50% or more of the year, you would be covered under the law. The other example the law defines is for employees who do not work in any one state for 50% or more of their employment. So say for that job, they're working 33% of the time in North Dakota, 33% of the time in Wisconsin, and 33% of the time in Minnesota. Then the question is, where do they live? And if they live in Minnesota, that's considered covered employment. So this can get a little tricky. The example we don't talk about is if they're out of state, if they're working from a location outside of Minnesota, then they're not considered covered. So let's go through some scenarios. The first one says, my business is located in Minnesota, but some of my employees live in Wisconsin. Are they covered? This one, it depends. So again, it depends where they physically work. If they come into Minnesota and work from a location in Minnesota 50% or more of the time, then they would be covered. But if they work in Wisconsin, say they work remotely 50% or more of the time, then they're not covered. Oh, that's my second example. So in the second example, my business is located in Wisconsin, but some of my employees work remotely in Minnesota. Are they covered? So yes, even if they're coming into Minnesota for work, then they are covered if they work from the location in Minnesota. And the last example, I work in multiple states, but I live in Minnesota. Am I covered? So this one, it depends on the amount of time. So if they work in multiple states, but none of them 50% or more of the time, then if they live in Minnesota, yes, they would be covered. So this is important for employers to think about as they are submitting wage records. So for employers, and we'll talk a little bit more about this, they will be submitting wage records quarterly, but they need to think about, for this period of this calendar year, is this person going to be covered in Minnesota? And they'll want to submit that. If yes, then yes, they should be submitting wage records for that employee. The UI Contact Center is a great group that can help you if you have specific scenarios when you're getting to the point of submitting wage records. And we'll talk more about that as we go forward. All right, so let's shift now and talk a bit more about what paid leave provides. As I said before, the paid leave program, the paid leave law has two components. There's job protections and benefit payments. So let's start talking a bit more about job protections and employment protections. So generally, when we're talking about job protections, we're saying that when an employee goes on leave, they must be restored to the same job or an equivalent position when they return from leave. And that means an equivalent position with the same pay, seniority, benefits, etc. And that job protection kicks in when someone has been employed for at least 90 calendar days from the date of hire. Now, there are also some other employment laws to be aware of. So the Minnesota Paid Parental Leave Act, or Parental Leave Act, also provides job protections, as does FMLA. So there might be other job protections to understand around that as well. The two other things to know about the paid leave law is that it requires health insurance continuation. So in general, employers must continue to fund their portion of health insurance group premiums while they're on leave. So if an employee was receiving health insurance through their employer before they go on leave, then they need to continue to pay the employer portion while that person is on leave. And the employee needs to continue to pay their portion. The final piece around job protections we want to note is that the paid leave law expressly prohibits employers from interfering or retaliating against employees if they apply for or use paid leave. And of course, employers cannot take paid leave payments from employees. So those are the employment protections under the law. Now we're going to talk a bit about how leave can be taken, because it's helpful as you're thinking through this to understand. Paid leave can either be taken continuously or intermittently. And what that means is paid leave can either be taken in one big chunk, that would be continuous leave, if someone took maybe 6 weeks off after a surgery, or they can be taken intermittently, and that's in smaller chunks of time. For example, maybe they need to take 2 days a week off a month, 2 days a week off to take care of a sick loved one. Or maybe they need to take off a specific schedule for medical appointments. Again, that would be intermittent leave. So those are helpful to think about as we go forward with the rest of the presentation. The other component of the law is benefit payments. So as a reminder, paid leave is really intended to make sure that Minnesotans can focus on what matters, whether that's caring for a child or recovering from an illness or supporting a loved one. The law is making sure that people don't have to choose between financial security and taking care of themselves or a loved one. And for that reason, the paid leave program is designed in a progressive way. That means that employees who are paid less get a higher percentage of their wages replaced. So Minnesotans can get up to 90% of their usual wages, up to a maximum of $1,423 per week. So for those at the lower end who get paid less, they'll get a higher percentage of their wages replaced. And those that get paid more will get less replaced of their wages. To qualify for benefit payments, you must have earned at least 5.3% of the statewide average annual wage in the past year to be eligible. And that's about $3,900 in 2025. So any employee in the state who has at least $3,900 in covered wages could qualify for benefit payments if they have an eligible reason. And that could be across one or more jobs. So again, it's part of the reason why even part-time or seasonal work is covered is because an employee may qualify because they have multiple jobs that add up to that eligibility criteria. And then it's worth noting that there are other payments that if you receive at the same time might mean you either have an offset or you're not eligible for paid leave payments. And those include unemployment insurance, workers' compensation, and Social Security disability insurance. So those are questions we ask about in the application, and we'll be checking to make sure that we understand if applicants are receiving those payments at the same time. All right, so we just talked about the benefits of the program. Now let's talk about how the program is funded. So as I said earlier, paid leave is an insurance program. So it's funded by premiums that can be shared between employers and employees. And when paid leave starts in January, the premium rate will be 0.88% of wages. And that covers both family and medical leave. And that premium rate is applied on wages up to the Social Security cap. I do want to note that's a typo. I'm noticing it should be 185,000, not 184, 185,000. There are no premiums due today. The first premiums will be due April 30th, 2026. Under the law, small employers also pay a reduced premium to make this program more affordable for small employers. So for small employers, the amount they pay is cut in half, and the total effective premium rate is 0.66% of wages. That doesn't change the amount that can be owed by employees. So a small employer can still charge employees up to 0.44% of wages. To qualify as a small employer under the paid leave program, an employer must have had 30 or fewer employees throughout the previous 4 quarters, and an average employee wage of 150% or less of the statewide average, which was about $107,000 in 2025. Another benefit for small employers that we wanted to mention is small employer assistance grants. So under the law, the program created a grant program that will be available starting in January 2026. So this funding will be available for any small employers that have an employee who goes on leave and they have eligible expenses. So if an employer has someone go on leave, they meet the small employer criteria and they need funding or they use funding to hire a temporary worker, increase an existing worker's pay, or training other workers to cover for the employee while they're on leave, they could be reimbursed for up to $3,000 per leave or up to $6,000 per employer. So this will all be live starting after program launch in January. So stay tuned on our website for more details about this application. All right. This is the most exciting part of our presentation, talking a bit more about taxes. So there is a really important piece we want to call out, especially for all of the folks in the room, accountants and otherwise, who might be dealing with or helping to do your own taxes. So the IRS issued guidance in January of this year of 2025 that applied to paid leave programs. So there are paid leave programs across the country. We're actually the 13th program, and there hadn't been any existing guidance. This new guidance clarified how paid leave premiums and paid leave benefits will be treated in terms of taxes. So we want to just go over that to make sure people understand. There's also a lot more information about this on our website and a very specific webinar that just covers this topic if this is something that you want to learn more about. So in terms of premiums, the premiums are collected on post-tax wages, and regardless of how much the employer pays, the employers can deduct those premiums on their taxes. The required portion can be deducted as an excise tax, and if the employer chooses to pay more than the minimum amount, then they can deduct it as an additional contribution as an ordinary and necessary business expense. Regardless of how much employers decide to pay, they should put that amount on the W-2 for employees at the end of the year. I know this isn't something we'll deal with until the end of 2026, but it's important to know. They'll need to put it in box 14 of the W-2 labeled as MNPFML, and they'll put that total amount of how much employees contributed. So that's the premiums. Now thinking about benefit payments. So the IRS decided that the benefit payments would be taxed in two different ways. So family leave payments are not counted as wages, but they will be counted as income. So that means that paid leave will issue any employees who take family leave a 1099 at the end of the year, and the employer doesn't have any responsibility. So that's pretty straightforward. In terms of medical leave, the IRS decided that medical leave payments, a portion of those payments will be counted as wages. And that means that they're considered something called third-party sick pay. This is sort of similar to how short-term disability is taxed. And that amount is subject to Social Security and Medicare taxes. So for most employers, this will be 50% of the payment, the benefit payment. For small employers, it'll be 33% of the benefit payment. That amount of the benefit will need to be reported on W-2s. And that amount is subject to payroll taxes. So the state will make that taxable amount available to employers as soon as someone is going on leave and receiving payment. So that will all be available in the portal. So again, that's a lot of information on taxes, and we have a lot more on our website. So if you have additional questions on taxes, we encourage you to go to our website, read the FAQs on taxes, watch the webinar on taxes, and hopefully we can get your questions answered. And we know we'll have more guidance going into next year. All right. Those are the basics of the program. So that's all that we're going to cover in terms of the core ideas of the program. Now we're going to shift and talk about getting ready for January 1st. So there are really three things you can do to get ready. You can set up your accounts, notify your employees, and prepare your workforce. So we're going to start by talking about setting up your accounts. Okay, so this is really important. In order to be ready for paid leave on January 1, you'll need two accounts, an employer account and a leave administrator account. The employer account is through the Minnesota UI insurance program. It's through the UI website, and the administrator account is through the paid leave website. So we're going to talk about both for a moment. So the employer account. So to recap, in case this is a new conversation for you, early on in the program, Paid Leave heard that employers did not want another redundant system to report wages to the state. So for that reason, we partnered with our friends at Unemployment Insurance, and they kindly helped us to convert UI existing accounts into joint UI Paid Leave accounts. So for anyone who had an existing account, those got converted, so they're a joint UI Paid Leave account. We call them a joint employer account. For employers that weren't covered by UI, they're going to go to the UI portal and set up what's called a Paid Leave only account. And we know for some agricultural employers, that's a step that they need to take. Again, wage reports were due for this previous year. So we're encouraging folks, if they didn't know about this requirement, or if this is new, that they go in and get set up with that Paid Leave only account as soon as they can. And this is where the UI Contact Center is available to help them. And the information here is there for them right now. So again, if you don't have your employer account, make sure you have that set up. Through that UI website is also where you will be able to designate who should be your paid leave administrator. So the paid leave administrator is really the person that's going to keep you in the loop for all things paid leave. So if you're a small business, this might be the same person. If you're a large business, this is maybe more likely to be someone who focuses on HR. So this is the person who will be able to review leave applications, see paid leave determinations, access benefit information for those tax purposes we just talked about. And again, this will really be the place where they'll be able to make it easy to interact with our program and support employees during those important moments in their lives. So I'm just going to say this one more time. If you have not done this today, this is the most critical step you can take. Make sure you have both of your accounts. You want to set up your employer account and then go into the UI website to identify your paid leave administrator. And we'll talk more about why that's so important in a moment. But if you already have your 2 accounts, awesome. You are ready to go. You've already submitted. You've already completed step 1. So then step 2 is to notify your employees. The paid leave law requires that employees are notified about paid leave in 2 ways. The first is by displaying a workforce poster, and the second is to notify individual employees directly. The paid leave law says that employees should be notified at least 30 days before premium collection begins, or 30 days before they can take leave under the law. And so that means that that date's really coming up fast. That's December 1st. So if you haven't done that, this is another action we would encourage you to do today or as soon as possible, is get ready to notify them for December 1st. So the first requirement is around the workforce poster. So the workforce poster must be displayed in English and in any language spoken by 5 or more employees or independent contractors. The poster is available. I'm going to let someone correct me in the chat if I'm wrong here, but my understanding is that it's available in even more than this many languages now. I know we had English, Spanish, Somali, Hmong, and French before. I think we now have 30 languages available of this poster. We also have a poster available for employers with an equivalent plan. So that will be another important thing. So check our website. Our employer toolkit has this poster available for download, and you can get that done today. Second is to notify individual employees directly. So you need to send a notification to individual employees, again, 30 days before, or 30 days before premium collection, or 30 days from hire. So for program launch, that means you should notify your employees by December 1st. And this notice should be provided to employees in their primary language. So we have many languages available on our website now. I know we are working on additional translations. Employees must acknowledge receipt of this notice, and employers will need to be able to demonstrate how their workforce was notified. If for some reason there's a language you need that's not available today, again, we'd encourage you to check our website, getting as close as we are to December 1st, because we keep adding additional notifications every day. But if you don't have the right language, we'd encourage you to notify them in English if you do not have the correct language available on December 1st, and let us know if you need an additional language that's not available, and then supply the correct notification once it's available. So thank you for your partnership and making sure your employees are notified. All right, so let's say you have notified your employees, you've set up your account. Congratulations. if you have already done those steps, which I know there are employers on the call who have already done those steps, you're compliant. You've done everything you need to be ready for January 1st, 2026. And we're really excited and again, grateful to all the employers who've taken those actions already and encourage others to get started on that today. There are other important decisions that you as an employer can make, and we're going to talk about a few of those today. And we want to make sure that you're making those so that it works the best for you and your employees. All right, so here are a few of the important decisions that you as an employer might want to think about before January 1st. This is about how our premiums will work for you, your employees, how paid leave works with other benefits, and updating your workplace policies. So starting with premiums. So as we said before, the paid leave program is a social insurance program paid for by premiums paid by employers and employees. And starting in January, employers will be able to deduct up to 0.44% of wages of those premiums from employees. Now, employers can choose to pay more than that for some or all of their employees. But if you offer an equivalent plan, you cannot charge employees more than you would under the state plans. You cannot charge them more than 0.44%. So whatever you decide, we're just encouraging you to get set up with your payroll system today or whatever other method you might use to collect premiums when the program goes live. So premiums can be collected starting in January, and then those premiums are due to the state in April. You can also estimate these. So we know that some of the math here can get a bit complicated. So if you have questions about this, you can go to our website and you can use our online calculators to estimate costs and payments. So just to give folks an example of what this might look like for you and your employees. For example, for an employee that earns $70,000 a year, their weekly premium, the amount they would pay if they're paying 50% of it, would be a little under $6 a week. And if they were to go on leave, they would receive about $1,000 a week, a little over that, from the state. So we encourage you and your employees to use those calculators to get a sense. So now we want to shift and talk a bit about how paid leave will work with other benefits. So we know that many employers offer other benefits for their employees, and so paid leave works and exists with those. So just a couple of things we want to make sure people understand is that, as we said before, the paid leave program will offer a benefit that is a portion of the employee's salary. So they're not in our visual here, there's the normal pay, and then the paid leave payment in green is just part of their total normal pay. So employers can choose to top off or pay supplemental payments for the amount to bring the employee up to whole while they're on leave. So employers can choose to offer this either through PTO, sick vacation, or just wage replacement while someone's on leave. An employer can choose to do this. This is the choice of the employer, and they can think of this if it's good for their business, if it makes sense for their employees. This is a choice, and employees have a choice to accept it. So employers have a choice to offer, and employees have a choice to accept it. I don't know if it's relevant for this audience, but my caveat of if a collective bargaining agreement exists, there may be other provisions that you need to consider. If the employer does not choose to offer supplemental payments, then other payments received from an employer during leave would be offset. So for example, if an employer is not offering supplemental payments, an employee can choose to use a sick day instead of paid leave. In that case, they would get paid from the employer for that sick day, and paid leave would offset that benefit payment. So that's sort of the basics of how paid leave will work with other benefits. We have a lot more guidance that we'll have on our website about this topic, and we're happy to answer questions. Because this can be a bit confusing, we do have some scenarios as well that we'll talk through today. We've heard from a lot of employers that they may currently offer a benefit for new parents. For example, maybe 6 weeks of full wage replacement. Can we still offer that? Yes. and it might be at a lower cost to the employer. So I know I've been trying to explain this to my husband's company that he works for. There's sort of the situation there. And in that situation, when someone now goes on leave, the original amount, the paid leave program will pay a benefit for a proportion of their salary. And so that full wage will actually be offset, or it'll be reduced, it'll be discounted by the paid leave payment. So the employer could choose to continue to fund that additional amount. So say the paid leave program pays 2/3 of the employee's salary while they're on that leave, the employer could still choose to pay the additional 1/3 that's remaining to make that person whole. And they could do that for 6 weeks, and it would be a lower cost. It would only cost them 1/3, or maybe because that's a cost savings, they might decide to offer that supplemental payment for longer. Another question we've gotten is, we want to offer senior managers full wage replacement. Can we do that? Yes, you can decide who can take supplemental payments, and you can make policies around this. Again, we'd encourage folks though to document that in their workplace policies and to make sure that you're following all relevant employment laws. Can we require employees to use their PTO so they can get full wage replacement? So for employers who currently work under FMLA, we get this question a lot because they can require employees to use their PTO first. But no, under the paid leave law, you can't force an employee to use their PTO. You can, if you do have PTO or sick leave though, an employee can choose to use their sick leave instead of paid leave in order to get that full benefit for those days. And then what happens if an employee takes full PTO during leave? So again, if an employee decides to use a full day of vacation, sick leave, or PTO, and it's not a supplemental payment, then they'd be paid by the employer instead, and the paid leave would reduce their payment for that day to 0. All right, so that was a lot of information on coordinating payments. Now we want to just quickly touch on how the coordination might work with other job protections. So as I said earlier in the presentation, employees may qualify for job protections under other programs in addition to paid leave. Those programs might include FMLA or the Minnesota Pregnancy and Parental Leave Act. The paid leave statute allows employers to run time concurrent with FMLA or Minnesota PPO. In addition, if an employer can show that an employee has already taken job protected leave for a reason that qualifies them under the program, then the amount of leave that the employee can take may be reduced. And again, this is something that we'll have more information on our website if you have follow-up questions. We'll show one scenario to help illustrate this because again, it was a lot of text, it can get confusing. So for example, if an employee takes 2 weeks of PTO, and it's an FMLA qualifying event, and then they decide to take paid leave. So in this situation, because the employer designated those 2 weeks of PTO as FMLA and they're exercising their right to use PTO in lieu of leave, their start date would be at week 1. And then the state could pay the employee for the additional 10 weeks, weeks 3 through 12, but they would not pay them for those first 2 weeks at week 1 and 2. All right, so related to these topics is our last recommendation here is that employers should also look at updating their workplace policies. So if you have under the paid leave law, employees are required to notify their employers first when they are applying for paid leave. That's the first step of any application. And so the law says that employees can be required to follow an employer's leave notice policies. And so we'd encourage employers to look at what are those policies and to update them if needed. And again, communicate them to employees because that's the first step they'll need to do if they need paid leave. Second, intermittent leave. So we talked early in the presentation that leave can be taken either continuously in one big chunk or intermittently in smaller chunks. So if an employee needs to take leave intermittently, an employer can decide what that smallest chunk of time can be. So an employer could decide employees can take leave in hours, or they can take leave in 30-minute increments, or they can take leave only in full day increments. And that's really based on what makes sense for your business. So we encourage employers to set that standard and set that policy around intermittent leave. The last piece, and this one is really pretty rare, so I'll go over it quickly, but there is a rare scenario where an employee might need more than 480 hours of leave intermittently in a year. And if that happens, an employer can decide that they want any amount taken over that to be taken continuously. So an employer could decide that as well. Again, that's a rare scenario, but it's something that might be relevant for some employers. All right, the last thing we wanted to talk about today is about administering leave. So when paid leave begins, your administrator count, as I said before, will really be the way for your organization to stay in the loop with paid leave. And that's the account that you are going to set up you go through the UI portal to identify the person, but this will be how you interact with the paid leave portal. So this point of contact is the person who'll manage your account, coordinate paid leave with other benefits, review applications submitted by employees, and apply for that small employer assistance funding. So we mentioned this briefly before, but this sort of is an overview of what the process will look like when someone applies for leave. So when an employee applies to leave, the first step is that the employee notifies their employer about their intention to take leave. Then the employee will start an application for paid leave. When the employee submits the application, the paid leave administrator will be asked to review it. And the paid leave administrator has 7 days to complete that review. And then the paid leave division will adjudicate or review the application and make a determination. When that determination is made, the employee and the paid leave administrator will both be notified of the determination. So that's kind of what employers can expect. Now, this is going to show us, let me make sure this is going to work here. So this is showing the paid leave application review process. So in the paid leave portal, there will be a process where employers, again, will have 7 days to review leave applications. So they'll be able to see any leave applications submitted by employees. They'll be able to confirm that the information submitted is correct, track the status of applications, and view past leave determinations. When they come in and actually review the leave application, it'll ask details about, is this information correct? Are these the correct leave dates? Did this employee work for you? Did this employee take any PTO while they're on leave? And employers will have a chance to verify that that information is correct. And if there are concerns, the paid leave will follow up to address those concerns before the application can be determined. If everything looks good, we encourage employers to complete that as quickly as possible, because it means that we can then quickly process the application, identify a determination, and hopefully approve the employee and send those benefit payments to the employee. So that's a little bit about what to expect from the application review process. Well, that brings us to the end of our presentation. So we just want to conclude by thanking everyone again so much for being here, and thank you for your partnership. We know that this is a new law. We know it's a lot of new information for employers, and employers across the state are who have really helped to shape this program in so many ways so far. We've had I think this is definitely over 300 engagement sessions now with a variety of stakeholders across the state, and we've learned a ton about things that we need to do to make this program better. We continue to conduct user research and get feedback on everything from the portals you just saw to the certification processes. Just a few things we want to, again, remind folks that we've changed as we've talked to employers. We learned from employers that we really needed that combined wage detail reporting system through the unemployment insurance system. And so that's a step that we've been able to take. We also were able to draft rules and that are supporting implementation of the statute with a lot of great feedback from employers like you. And we were able to partner with the Department of Commerce to create a viable market for equivalent plans. We're gathering additional feedback from sessions like this, and we're really excited to shift now to Q&A so that we can gather more and hear more about your questions about the program. All right.
Well, thank you so much, Betsy. And again, now we'll transition over to the Q&A session. Remember, if we don't get to your question, our contact center is ready to help you at any time via our online form or by phone. We'll start by answering some of the questions that were submitted in advance by you all, and then we'll open it up to audience questions. So we got a lot of questions that came in about coverage and eligibility for paid leave. So Betsy, the first question is, our family farm has 2 owners and there are no other employees. Do we still need to implement paid leave?
Yeah, so again, what I would, the law is really about the definition of if somebody is self-employed or not. So what my follow-up questions to this person would be a little bit more about, like, are they self-employed? So in the scenario where that person is structured as an S Corp, if they have two people who are receiving W-2 earnings or W-2 wages from that S Corp, then they would be considered employees and they would be considered covered by the program, because paid leave has no explicit exclusion for S Corp owners like UI does. There may be other scenarios where they might be structured in terms of self-employment. So if they are structured like an LLC or another structure, then they could be considered self-employed and they would be not covered by the program.
Okay, this is a similar question. As a stay-at-home farm wife and mom, is there an opportunity for me to take advantage of this program?
Yeah, so again, my question would be, if this person is receiving wages from the farm, from the employer, and they are working or have worked at some point in the year, the question is, do they have wages of at least $3,900 in the previous year? If they do, then yes, they'd be able to take advantage of this program and take leave under the law. So again, just reminding folks that that is meant to be really broad. Coverage is really thinking about anyone who might work across the state of Minnesota to make sure that we have a wide swath to support people when they need leave.
So does that include children or minor children employed by parents also covered by paid leave?
So there's no exemption around those wages. So those wages would be reported to the program.
The next question is, do I need to report wages for seasonal or harvest workers? And how does this apply for employees who have H-2A visas?
Yep. So under the law, there's currently no seasonal exemption for agricultural workers. So seasonal agricultural workers would be covered under the law. And again, there's also no exemption for H-2A visas under the law currently. So both of those would be considered covered wages, and they should be reported to the program. Again, taking leave depends on other aspects, but they should be covered wages. Okay,
can an employer or an employee opt out of the program?
So there's no process to opt out of the program. If an employer would like to meet their obligations under the statute through an equivalent plan, through a private option, they can choose to ensure either by purchasing a plan or by providing coverage through a self-insurance option. The deadline for employers to submit those equivalent plan applications for January 1st to be eligible January 1st was November 15th, but employers can apply for an equivalent plan at any point at any quarter. So they could apply now for the coverage starting for the next quarter. So if that's something, again, there's more information on our website if that's something people are interested in. And no, there's not any way for employees to opt out of the program. And I just want to emphasize again, the design of the program is an insurance program. So I think many people on the call probably understand the idea of insurance is to have a broad pool of people who are all covered and all pay a very small amount of money to then cover people when they have a need. In this case, when they have a need for medical or family leave. And so the idea here is that by having a very wide pool of coverage across the state of Minnesota, it protects people when they have that need or that serious life event. And so that's why, again, there's no way to opt out of the program.
Thanks. So I mentioned earlier that on today's call, we have Aaron Tell from the Unemployment Insurance Division. He's going to help answer questions about setting up paid leave only or mixed UI paid leave accounts, really around wage detail reporting. So this next set of questions I'll direct towards Aaron. Hi, Aaron. Okay, so do employees need to report wages when they're earned or when they're paid?
Okay, so good question. Employers report the wages during the quarter that they're paid, not earned. So for example, since we're in December, let's say an employee works for you, December 17th through the pay period ending December 31st, 2025. But they're not paid until January 6th. Under those conditions, they would report those wages on the first quarter 26 wage detail filing.
Great. When a business has employees who are on UI and some who are not on UI, how does the employer register those employees?
Okay, so this is a situation where the person will have to go to the unemployment insurance website, which is www.uimn.org, and they would register for both accounts, the joint UI paid leave account and the paid leave only account within our website. We will ask questions during the registration process, and in doing so, you will end up with either the joint UI paid leave account or the paid leave only account. They are different accounts. They have different account numbers. However, they'll share the same federal ID number. Okay. In both accounts, it will be important to designate the paid leave administrator.
This one was asked a couple of times. It's around annual versus quarterly reporting. Is it possible for employers to do wage detail reporting on an annual basis rather than quarterly?
Yeah, it's a good question. So wage detail reporting is done on a quarterly basis, not annual. And I think the important thing to note here, this sometimes happens with startup businesses. Once an account is active, we are going to expect to receive a wage detail report every single quarter until that account is terminated. And it's possible, especially with a startup business, that maybe a quarter or two might go by where there are no wages being paid. It is still necessary to submit a zero wage report under those conditions. So it's quarterly and not annual.
Got it. Thanks. Should I include commodity wages when doing wage detail reporting for paid leave?
Another great question. So the definition of wages does expand beyond just cash. It does in fact include commodities. So whatever the fair market value of the commodity is that you're providing to your employee, that needs to be included on the wage detail submission. So yes.
Will those commodity wages then require additional documentation to substantiate the hours worked and the weekly income if normally paid annually to a family member?
Yeah, so we do, it's kind of interesting. During the wage detail submission process, we gather wage information from your employees, but we also ask for the number of hours that they worked. And really our message to employers is do the best you can. Provide the best number of hours that you can provide. If it's if the hours are really unavailable and they're working full time, consider reporting that they worked 40 hours per week. But again, just do the best that you can with those hours worked.
Thanks, Aaron. And the last question here is, what happens if an employer just learned about paid leave but has not yet submitted quarterly wage detail reports? Will they be penalized or fined?
Another great question. So first of all, take a deep breath. We are not here to penalize anybody. That's the last thing we want to do. Our goal is to just get everybody into compliance. So, so our message is go out there, get the account set up if they're not set up. If they're set up, great. Get those wage detail reports in. There are not currently going to be any kind of assessments for late wage detail reporting for paid leave. And so, just get those accounts in. At some point, they'll certainly turn on some sort of assessment for late paid leave reporting, but we're not concerned about that now. We just want to make sure you get caught up to speed and are in compliance.
Well, that is so helpful. Thank you, Aaron, and thank you for being on the call today. And please stay on the line in case we have additional questions that come in.
Great, thank you.
But for now, back to Betsy. Betsy, we have a couple questions here on leave administration. The first one is, how does paid leave interact with other PTO, earn sick and safe time, and FMLA policies? That's a big question, so you might want to take it one by one.
Thanks, Corinne. Yeah, so we said we did talk a bit about this during the presentation, but this one could use repeating. So I'll try to cover some of the basics again. So when you're thinking about PTO or ESST, sick vacation time, there are sort of two ways this can work. An employee can choose to use sick, vacation, ESST instead of paid leave. So they could say, oh, I have 5 days of sick leave. I would like to use that instead for the first 5 days. If they decide to do that, then they would get paid through the sick leave through their employer. And when they come and apply to the state, they would let us know that. Paid leave would then not pay them for those days because they're being paid by the employer instead. So that's kind of the most important thing to know. The other thing to know, though, is that an employer can choose to also allow employees to use sick leave, vacation leave, PTO, et cetera, as a supplemental benefit. In those cases, an employer could say you can use like a third, whatever amount of the day, maybe it's a third of a day or half a day, to make up the difference between the benefit you're getting from the state and your full pay. And then they would, keep records that they're using that amount of sick leave during their leave, and that would bring them up to whole during their leave. So that's really how the kind of two main ways that PTO or ESST might work with paid leave. FMLA and the Minnesota Parental Leave Act, both of those laws, an employer can choose to run them continuously with paid leave. And if they're choosing to do that when there's an eligible event, they should let their employees know this is eligible under both programs and make sure that their records reflect that.
Thanks. And you talked in your presentation about how the employees pay 0.44%, but can employers pay the entire premium instead?
Yeah, so if an employer chooses to, they can choose to pay more than the required portion of the premium. They can pay 0.44% or more up to the total amount. So either up to 0.66 or up to 0.88% of the premium. One thing I will note, this is called sort of an employer, like an employer is paying an additional amount, and there are some tax implications of that. So if you do that, that additional amount you pay is considered wages and needs to be reported on the W-2. So that's something you might want to think about. But again, that is something that you can definitely do, and you'll reflect that in the employee notice you send by December 1st.
So we had a question on the leave administrator role. Can a company have their payroll rep be the leave administrator, or does it need to be an employee of the company?
Yeah, I think that's a great question. So when you go into the UI portal and designate your leave administrator, you can designate like a TPA or a third party to be the leave administrator if that makes sense for your business. What we would encourage people, though, is if you work with a payroll company like ADP or something, they might know all of this payroll information, but they probably won't know the leave information. So they will probably not know as much about this person is going to be out for 6 weeks because they're having knee surgery and blah, 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 blah. So you might want to think about, is that the right person to have access? But there is a way in the system where you can, again, identify and identify a third party like a TPA.
Great. We had a question on intermittent leave. Can paid leave be taken sporadically like vacation? And does an employee initiate the paid leave, or is it the employer's responsibility to report that time?
Yeah, great question. So let me just talk a bit more about intermittent leave because it can be a little bit confusing. So as we talked about, intermittent leave is when leave is taken in smaller chunks of time. And there's really two ways this might happen. An employee may either need to take leave on a sort of set schedule or a known schedule, which they'll then tell the division. So they'll tell paid leave. So maybe, again, we talked about someone always needs to be off every Monday and Wednesday to take care of their mother who's sick. In that scenario, again, they could say, I'm going to be off for the next 12 weeks every Monday and Wednesday. And that would be a leave schedule that would be approved by the division and shared with the employer. In those scenarios, again, that payment could be set and sort of consistent each week. But there might be scenarios where someone needs episodic leave. That really means that they don't know what the dates are going to be. So an example, I had an employee at one point who had really terrible migraines, and sometimes this is a common reason someone needs episodic leave. So in those scenarios, they'd have a medical certification that would say they might need up to so many days of leave, and they would then report days that they need leave to paid leave. So they would, again, apply for leave and be approved, but they'd need to report those exact days they take leave in order to be paid. And in that scenario, the employer will also be notified of the days the employee says they need leave. All of this is initiated by the employee. In those scenarios, again, it might make sense for an employer, if someone's taking episodic leave, to also track on their end, because they're going to be out more inconsistently, so that when paid leave notifies them, they can check and make sure that the records are the same as what they're seeing on their end.
Great. So you talked about taxes in the presentation, and we do have an explainer link in the chat, but we got the question in, what are the tax deductions on paychecks and the reporting requirements? So if you can just go over that really briefly.
Yeah, so I guess I think this has come up a couple times. So when employees, so now that we're getting to the point where we're actually getting ready for paychecks to have deductions starting in January. So under the paid leave law and a related law about paycheck reporting, I suppose, what's required is that employers should put on the paycheck the amount that the employer is paying and the amount the employee is paying. And if they're paying any additional amount over the required amount, they should put that too. So I'll just say I looked at this under like my paycheck. It shows like employer deductions, paid deductions, and employee paid deductions. So paid leave would likely show up in each category, and you'd want that amount on each of those lists. Then at the end of the year on the W-2, there are going to be, again, a variety of things that need to be reported. That amount that the employee paid in premiums should be in box 14 of the W-2 with the designation MNPFML and the amount that the employee paid. And then there also will be any amount of medical benefits that are considered wages will be reported as wages on the W-2. And again, paid leave will be providing a lot more documentation about that. So if you had an employee take medical leave, we'll be sending you information about what needs to go on their W-2 at the end of the year. The last caveat, and this is only if you're considering paying more than the required portion, if you decide to pay more than the required portion of the premium, that amount is also considered wages and also needs to be shown on the W-2. So that's a lot of information. I encourage you to look at the follow-up links. I think that those will help for those really specific tax questions if you didn't catch all that.
Thanks, Betsy. The next question is on supplemental wages, or supplemental benefits. How do I supplement wages so my employees can use vacation or earn sick and safe time to top off and retain a full paycheck? How do I calculate the wage? Is it based off the last quarter of earnings?
This is a great question, and I know it's something employers are starting to think about. So to clarify, the benefit payment in general is usually retroactive, but for supplemental payments, the law says that employers can't pay more than their usual wage. And so that really means how much they would have gotten paid if they weren't on leave. So for example, if the employee just got a raise and they're now earning $2,000 a week, they can't receive more than $2,000 a week. So what, as an employer, you're going to want to do is when the determination is made, there will be a an amount that will be on the determination notice that both the applicant and the employer will see. And that amount is their weekly benefit amount. That's the most they could get paid by the state. So say the state says they're going to get $1,000 a week from the state. Then you'd want to look at that math and say, okay, their maximum paycheck before deductions is $2,000. They're going to get from the state $1,000 before deduction. The most I can pay them is $1,000. And if you want to do that conversion into PTO, what I would do is do that as a ratio. So say 2,000 divided by 1,000 is 50%. So they would use 50% of a day or half a day every day that they're out. I do think we have some more guidance on this and happy to provide some more examples if those would be useful for folks.
That's very helpful. So we have 2 more questions that have been submitted. Can an employee utilize both short-term disability and the paid leave program at the same time?
So we will say that one thing that's sort of important to know about short-term disability is that the marketplace for short-term disability will be changing starting in January. It's probably changing right now. So most disability plans we know will either become a full equivalent plan that could be used instead of paid leave as an option, or they'll become more supplemental plans. So they'll just cover the difference between, again, what the state pays and what the employee was receiving when they weren't on leave. The paid leave program is the first payer in cases where short-term disability exists. So we would pay the payment, maybe the $1,000 in that last example, and then the short-term disability company would figure out that they can pay the additional amount, and they'd be addressing and making sure that they can pay them, that additional $1,000 or whatever it might be. So yes, they can, but that's how it would work.
Great. Okay, so our final question here is a challenging one, and it's one we hear pretty often. The question is, our onboarding and training take 4 to 6 months, and I don't know how we'll backfill roles if a large number of employees take 12 to 20 weeks all at the same time. Temporary labor does not work for our organization. What is the solution?
Yeah. So again, I want to recognize that I know that there are many people out there with workforce challenges already, and I know that this is a big new program and that it can be stressful at this moment in time. So I don't want to give you an easy answer that's not accurate, but I also want to help make sure that people understand accurate information about the program. So as we talked about today, first and foremost, an employee has to have an eligible reason to go out on leave. So they have to have a certified reason, either a certified serious health condition that lasts 7 days or more, or they need leave, to care for a family member or to bond with a child. So we have to assume first, will employees have those reasons starting after we go live? And based on the experience from other states, which again, we're gathering a lot of that data in order to inform our actuarial analysis, our accounting. What we know from other states is that the percentage of people who take leave won't dramatically change in January. Okay, so we should not expect all of a sudden people are going to have medical illnesses at a much higher rate, right? And that in general, what other states have seen is that the average length of a benefit claim is not the maximum amount of time. It's usually more like 7.5 or 8 weeks. So just wanting to make sure that people are setting their expectations accurately, that I would not anticipate that most employers would see a ton of claims happening at the same time in that scenario. And again, I want to emphasize that the most common reason people will need leave is medical leave, which is something that, again, I know as employers, we all are dealing with all the time, that people do have serious health issues. And right now, the challenge is they often can't take that leave to care for themselves. Or sometimes as employers, I know I've had to deal with this before, you have to choose, do I continue to pay them or do I continue to pay a new employee? And in this scenario, the state will be paying that employee who's on leave, and you could be paying a temporary employee while they're on leave. Now, I recognize that there are challenges. I recognize that there are not answers for temporary labor in all situations. And so I don't have an easy answer for that. I will share that our partners at CareerForce are helping to address some of this and are looking into ways that they can continue to support and identify more workforce solutions for specific industries where there might be a need for more temporary training programs, et cetera. So we can share some more information about those partners in the chat, or we can definitely send some follow-up information to people who'd like that. But just want to make sure that people are anticipating this. If you've had people go on medical leave before, what did you do? And what might you do in the scenario where that happens in 2026?
Thanks, Betsy. That's so helpful. Now we'll transition over to live questions. So if you still have a question and it hasn't been answered, please put in the chat. We have about 20 minutes left, and I think we can get through a lot of them here. So the first question is, can employees use paid leave if they need to take care of family outside of the country?
So under our law, they are allowed to take leave for if they have to take leave for a family member that is outside of the country. In all scenarios of carrying leave, the medical provider of the person needing leave needs to fill out the certification. So if that's a scenario where the medical provider is out of the country, there will be additional steps for us to verify that that medical provider is a true medical provider and is providing and is certifying that need for leave.
Great. Will Minnesota paid leave be a separate line on employees' pay stubs?
Yeah, I think I did answer this one before, but yes, because it's a new deduction and a new employer paid premium, there should be new lines on the pay stub, one for the employer portion and one for the employee portion, to make sure that that's accurate.
Great. The next question is around the definition of family. Who counts as family for bonding, military, or safety leave? Can multiple family members take paid leave to care for the same person? And what proof does the employee need to be able to provide?
Yeah, great questions. So the definition of family under the law is fairly broad, and maybe someone can put a link actually to our website here to help answer this question. But this would include, family, parents, children, stepchildren, step-parents. It's a very broad definition. It also could include scenarios where there is somebody who relies on someone for care, even if they're not a blood relative. And that would be, again, where a scenario is like, maybe you have an elderly neighbor who doesn't have any family, but you are the person who cares for them, and you are the person who's attending medical appointments with them and helping care for them when they're having a serious illness. I've heard, again, I just want to emphasize, as we've been out talking to healthcare providers, we've heard that this could be really life-saving for a lot of people. A lot of people end up being discharged to the hospital, and the hospital's full because there's no place to send them. And so doctors have been saying, oh, this would be so great. Right now, we don't have enough care facilities to send people. So maybe we could say, do you have someone who could take leave to care for this person? In all of those scenarios where someone's taking leave to care for a family member, and again, that could be military leave as well, there will need to be certification. For military leave, it looks like that person's deployment orders of the person who's going on leave. For medical caring leave, it requires that the person who needs leave, that their medical doctor, their medical provider, signs forms that say this person needs leave, this person needs someone to care for them, what they need them to do. It's similar to FMLA if someone has ever looked at that process. And another requirement is that if they're going to have more than one person caring for them, the same medical provider needs to sign all those forms. And we'll be working on ways to make sure that we're tracking and addressing any issues where there might be, exceptional numbers of people. But we do want to also safeguard and make sure that, again, there will be scenarios where if my mom was discharged from the hospital tomorrow and she needed someone to care for her, I would be piecing this together with my husband, my brother, and my sister-in-law, right? We might each take one day off a week so that we could take care of my mom. And so we want to make sure that we're balancing that program integrity concerns against making sure that this program is useful and helps take care of those people who need caring leave, which, again, as we know, our workforce in Minnesota is aging. We know this is really important. And I know many of you on the call can probably relate to that.
Great. This next question is around when to start deducting the premium. Do Minnesota paid leave withholding start as soon as the employee starts, or when they hit the $3,900 threshold of wages? For example, if we hire a teenager and this is their first job ever and we're not sure how long they'll stay.
That's a great question. So again, because this program is thinking about this as an insurance pool, Wages are covered right from the start. So an employee is only eligible after they've earned $3,900, but that could be from any job. So say that teenager then graduates and goes on to another job, the $1,000 they earned with you plus their next job might be enough to make them eligible. So you can start deductions right away when someone starts, and any wages that are covered employment should be covered under the program.
This next question is around the opt-in option. If a self-employed person wants to opt into the program but has a loss instead of income, how does that work?
Yeah, so I'll just speak a bit about the opt-in process. So for an employee, for self-employed person who wants to opt into the program, they are required to opt into the program for at least 2 years. And in that scenario, they are paying premiums and receiving benefits based on their self-employed income, so their self-employed earnings. So if in the past year they had self-employed earnings of $25,000, that's what they'd be paying premiums on. That would also be the amount that they would be getting benefit payments on. So I would have to check this, but again, I don't think that they'd be paying premiums, and I don't think they would have covered wages if they had zero or negative earnings in the previous year. But I can verify that one and make sure it's right. But my understanding of how opt-in works is, again, it would be based on that amount.
Great. This one is about around the localization test. If I have employees that only work for me a few weeks in the year in Minnesota, I'm not sure where they work the rest of the year, whether it's in Minnesota or not. Do they pay premiums? Are they covered by the program?
Yeah, I'm not sure if I answered this as clearly as I could have. So when you are an employer and you're going in and doing the localization test, that's just on that employment. So you're going to say, is this employee for me, for my work? Are they working from Minnesota 50% or more of the year? And so even if they only work for you for 3 weeks, if those 3 weeks are all in Minnesota, then those wages are reported. That's covered employment. Okay, so again, as an employer, you're only trying to decide if the wages are covered, and again, if that job is covered. So you're thinking about if they're employed. Then on the back end, when they apply, we'll be looking across all of their jobs to see if they had enough covered wages and if they can be eligible for benefits.
Great. This next question is around small businesses and the threshold to receive the small business premium discount and be eligible for the small business assistance grant. Is the 30 or fewer employees during the month or during the quarter, or is it 30 different people employed anytime during the calendar year?
Yeah, this is a great question because I know people are wondering and will be getting premium determinations shortly. So the law defines this pretty exactly. So again, the program does not have flexibility around this. The law defines that a small employer is any employer that had 30 or fewer employees during all the quarters in the previous year. So the designation right now is being sent out very shortly, and it will look back at the past 4 quarters. So Q4 2024, Q1, 2, and 3, 2025. If there were ever more than 30 employees reported in those wage records, in those quarterly wage reports, if you ever had 31, then you would not qualify as a small employer under this part of the law.
That's very helpful. And what if you have 30 or fewer in Minnesota, but you have more employees in other states?
Great question. So again, you're only reporting your covered employees in Minnesota in that quarter. So if you had 30 or fewer in Minnesota in the quarter, then again, you could qualify, even if you had employees in another. We won't be collecting information on your other employees.
Okay, the next question is around temporary workers. If I hire a temporary worker to cover someone that's on paid leave for 20 weeks or over 90 days, is that temporary worker now also eligible to take paid leave? And if so, if that temporary worker does take leave, is their job protected as well?
So one important part of the statute, there's again, the right to reinstatement is that piece around job protections. So the right to reinstatement talks about if an employee has a right to return to their previous job that is similar, et cetera. If you hire a temporary employee, there are limitations on the right to reinstatement. And so again, there's specific language in statute that talks about if an employee has been hired for a specific term that is set to end, they do not have protections beyond that period. So again, there's lots of examples of this. If there's a temp worker who's being hired and they're again on a temporary assignment, then the right to reinstatement might not apply to them. So that's just around what paid leave requires. Again, could they take paid leave? Yes, but the job protections for that temporary worker would have a different criteria to meet than the sort of ongoing worker. And that's something you can look at, that exact language, if that's helpful.
Will the premium rate increase if employees use the program?
So unlike unemployment insurance, which does increase, paid leave premium will not increase. So that based on how much the employees use the program. So that rate of 0.88 or 0.66 is a set rate that does not change if you have no employees use the program or 20 employees use the program. That amount will stay the same for the employer.
How much notice does an employee need to give to their employer before they take paid leave?
That's a great question. So under the statute, it says that an employee needs to give at least 30 days of notice if practicable. Now that's a big word. So really what that means is if they can, they should let you know 30 days in advance. If they have a planned surgery and they can tell you 30 days in advance, they should. There will be scenarios where it won't be realistic to tell someone 30 days in advance, like a car accident or a sudden illness. In those scenarios, they're supposed to tell the employer as soon as practicable. So again, there might be scenarios where someone has to apply retroactively because of a terrible accident or medical illness. And again, in those scenarios, they should tell the employer as soon as possible. But as you're talking to employees about leave or about life events, again, encourage them to tell you about their leave plans as early as they can. They can also apply to the state up to 60 days in advance. So again, the more on the same page the employer and the employee is, the smoother this whole process will go.
We have time for a couple more questions here. Some of my employees have 2 jobs in employers. Are both employers responsible for certifying leave? And do employees need to submit an application to both employers?
Great question. So employees, again, we know many employees across the state have multiple jobs. When they apply to paid leave, they'll tell us any employers that they've had that they're currently working for, they worked for in the past 6 months, and then they'll tell us what employers they're taking leave from. So an employee and an applicant could say, I'm taking leave from both employers, or there might be some rare scenarios where they only need to take leave from one employer. Maybe they work on a farm and they broke their leg, and so they have to take leave from that employer, but maybe they can still work at Starbucks because they can sit down. Who knows? In those scenarios, again, they'll tell us in the leave application. The employers from whom they're taking leave will get that notification that they're taking leave and will need to review their application. So again, we will be looking at the certification documents and reviewing them, but the employer will have a chance to review and make sure it aligns to their records. And any employers who the employee is taking leave from will get notified.
Great. The last question here is when someone needs to take paid leave unexpectedly, like they're in a car accident, are they given back pay for the time that it takes for the employer to review and for them to submit and for the application to be approved by the state?
Yeah, so again, the law allows for backdating in certain scenarios. So an employee could backdate up to 7 days without cause, but if it's longer, like say again, they did have a serious car accident and they couldn't apply, they can apply for backdating for longer if they have good cause. So if it aligns again, if they had a significant health event that prevented them from applying, and in those scenarios, yes, they could get back pay for that time it took for the review to happen, and any days that they could not apply because of the medical condition. So the law does allow for that.
All right, well, it's almost 1:30 and we want to be respectful of everyone's time today. And I'll start wrapping up by asking for everyone's feedback on today's webinar. There's a link to the short survey in the chat. It only takes about 1 or 2 minutes. It'll help us really understand what worked well, what could be improved. As mentioned, if we didn't get to your questions today, please visit our website. We can check the FAQ pages for employers and employees. And I'll turn it over to Gary Wardish from the Minnesota Farmers Union for closing remarks.
Thank you, Corinne and Betsy. I just want to thank everybody. Well, first of all, I want to thank both the DEED and Department of Labor, and especially Corinne and Betsy for answering these questions, and in the Department of Ag and Farm Bureau and Farmers Union for helping sponsor this. We just finished our annual convention, and this issue was debated and talked about quite a bit. And there's a lot of concern about the how are we going to make this work? Is it going to? The big concern, a lot of it is, is the program going to be too burdensome with record keeping, and especially for a small employer? So, this, you couldn't come at a better time to help explain it. And hopefully we got some of the questions answered here. And I think the majority of the people, even during the debate we had, the majority of people supported it, because it's you need to treat your employees right, and do what's right for the employees. So, it's just a lot of concern on starting another new program. So hopefully this helps, and I want to thank you again for hosting it.
Well, thank you, and thank you everyone for your time today.